So I'm here today with Rich Berry with Pride Rock Mortgage. And Rich and I were talking earlier about new construction, and there's a lot more of it. And so we thought that we'd just have a little gloss over of the different kinds of programs that are out there. How are you finding the construction financing market?
Well, there's more construction now, I think, than I saw, say, in the last couple of years. And I think that has to do with inventory. Inventory's kind of low. People are moving to New Hampshire, so there's land to be had. So people are turning to construction loans. So we're seeing a little bit more of that.
So there's a few different types of ways to do that. So maybe
Yes.
you can demystify how that goes. So one is that you would buy it. There's a builder,
Yes.
he's building a whole neighborhood,
Mm-hmm.
and then they're going to buy it. Or the other side is maybe they're going to buy the land,
Right.
and then the builder's going to build it, and then they're going to convert it to a fixed rate later, like an end loan, right?
Right.
Can you touch on both?
Well, if it all depends on carrying cost. If you go to a developer and you say, I want, this house built on that lot, then that's kind of like buying an existing home in that you're going to go in, it's going to be a regular residential loan. Everything's the same. The appraiser will actually go out there initially, pull comps and maybe take a picture of the land. And then all they do is complete the house. And then when they complete the house, everything's complete. It's very, very much like building or doing a loan on something that's existing.
Mm-hmm.
It's very similar. And a construction loan, a little bit different. That's the buyer is carrying the cost. So in other words, let's say there's a piece of land. They can handle that two different ways. The buyer can maybe they own the land, or they can buy the land and then do the construction loan. Or they can see a lot of land, make an offer on the land contingent upon them getting a construction loan. So they would make the offer, it gets accepted, they get the construction loan, and they kind of follow Fannie guidelines, and a construction loan works in a series of draws. So maybe they close on the loan, the first draw, they buy the land from the construction loan. Then the second draw is, somewhere further along in the process when maybe it's framed or something. So then at the end of, say, the first 30 days, you pay interest only on what you drew. So if you drew 100,000 out the first 30 days, you're paying interest only on the first, on the 100,000. Then when the loan's done, you're through the construction phase, and then it doesn't close again. The one I like to use, it goes right to a 30-year fixed. So it's actually a 31-year fixed loan, but that first 12 months can be a construction period. So it's interest only.
So there's a few different ways, and then within that, it probably depends on money, how much money you have to put down. So are there can you kind of go through the different types of construction loans?
I have a construction lender that will follow the Fannie guidelines. So they'll do the lending limits, the county lending limits, and you can put 10% down, there'll be PMI and all that stuff, just like a Fannie Mae loan. I have another lender will do 5% down, same type thing. And then they have VA, I have a lender that does VA construction loans, which is 100% financing, just like a VA loan. So you can do that, or FHA, they do FHA as well, 3.5% down if you really want to, on an FHA construction loan. So there's all kinds.
So maybe what we'll do is we'll talk a little bit more in detail on the VA and the FHA in a future video. So if you want to learn more about construction loans, you can contact Rich Berry at Pride Rock Mortgage. What's the best number for you?
603-498-8736.
Or you can go to your website, which is
www.priderockmortgage.com.
And of course, you can always visit us at paulamartingroup.com. Thanks for watching.
Thank you.